This session again of the Master Pattern Trader. I'm going to begin by looking at the US dollar index because I see some important things going on here. The US dollar is correlated against obviously most of the major pairs. So the US dollar index tracks half a dozen of the major currency pairs, and basically what we're seeing has been confirming what I've been looking at for a long time, where it was my great suspicion that this was a major top along a 42-year trend line that we put in the dollar, and with the top put in, it means that this thing is only going to go lower. Now, I thought it could mess around here for a while, but it looks like it's gaining traction to the downside. So in addition to the double top, we also have this interim head and shoulders, and we kind of made a retreat back to this neckline here. And now you can see, let me just reposition this so I can make this a little clearer. So we came right back to the neckline. The neckline is simply a line that connects the entire pattern. So you can see we have this head and shoulders, and so the neckline runs through the pattern. And then typically, prices thrust through the pattern and then retest it. And then when they fail, they really go the other way big time. So what we have here is two inside bars. So, the week is not closed. We're not done with trading, but, I can imagine that we're going to end up being. So you can see that the last 2 weeks, we're creating this coil. So the price action of the last 2 weeks has been within the trading range of that session 3 weeks ago. So to my mind, these inside bars, they create a coil. And to me, what it means, it just builds energy to go in the direction as indicated by the pattern. So I never look at a key reversal or an inside day bar just in a vacuum. I look at it in context with what's happening with the prior trend or pattern. And to my mind, again, the double top, the head and shoulders here, which are bear price patterns, which indicate a reversal. So, the trend for the last 10 years has been higher. And now we have this reversal head and shoulders price pattern. And I see there's a couple of new people here today. So let me just explain head and shoulders. Looks just like a man or woman's. That would be the left shoulder. The peak is the head, and that would be the right shoulder. And then you have a head and shoulders looking price pattern. And this is frankly all you need to know. You don't need to study what's going on in the forums or the news or economists or whatever they're saying. This price action is telling you what is going on. And so again, we had a retest here. This is what prices do, and looks like we're failing, and now we're coiling. Now I don't know if we're just gonna just collapse here, because typically when you're crowded up against some price history, it's hard to kind of go right through there. But this looks like it's building to certainly fall. Maybe next week, maybe the week thereafter. But this is looking like it's going to go the other way, meaning lower. So we also thrust through a long-term trend line a long time ago, where we kind of broke below the trend line. So a lot of things indicating the dollar is going to go lower. So obviously with the dollar going lower, when we look at the euro or the pound versus the dollar, now my expectations are that the euro will go higher. So it's just an inverse relationship. This is really an upside down version of the dollar index, because the euro comprises 60% or so of the dollar index. And I thought we'd get a retest back to this 115 area, but it looks like this thing is, holding. So what I see is, just like I said, an upside down version of the dollar index, where now you have an inverted head and shoulders. And you can see that the neckline, and I thought we might come back down and retest this 115 area, but it looks like we've, stopped short. It may still happen, but it does look like, again, we've got this long-term bottoming pattern going on in the euro, where we have the head and shoulders in the recent thing, and then we have this big kind of even atom double bottom right here at the 104. So you got a multiple, things saying that we built a base now, and now, we're, going to, I think, start retesting some critical levels. So, this recent 120 or so, so anything kind of north of 120, 122, to my mind, is going to start opening up, some legs to the upside. And so this pretty much crossed the spectrum. British pound, I think, is building energy to go higher. Again, we've looked at this for a long time, and I've been speculating that, this looks very much like an Eve, where you have, multiple thrusts to one low, and then you have a single thrust to another low. And, now it looks like this thing's been hugging this trend line. And we've got this coil. So you've got this, last 3-4 weeks, you've got this coil going on where you've got a lot of inside ranges. And, to my mind, it looks like the next burst of energy is going to be to the upside. Now, there's, a lot of resistance here at 132, 135, and that will be the critical test for the pound. If we can start getting above here, then it would start very much looking like, a bottom, almost like a large inverted head and shoulders. That's a complex inverted head and shoulders. And so this would be the magic area. Any thrust above 135 would effectively, I think, start confirming that this is a bottom. Now, it's likely to be volatile. We're going into a major election next month in the U.S. with a lot of controversy, obviously, both sides saying they may even contest the outcome. So I expect that there's going to be a lot of fireworks in the markets. And so you can see we've got this long-term downtrend line, somewhat arbitrary. I mean, maybe wherever you want to. So the next thrust is not too far away at around 130. And then again, this 135 area, to my mind, would really start confirming that this 10-year downtrend in the pound US dollar is, going to start going the other way. So again, you've got this good coil in here. I like to see, where you build compression is typically when you get compression. And what I mean by compression, all these inside bars where you just got all of this energy at a similar level. And, usually you get, bursts out of these things. And by virtue of what we're looking at, I'm speculating that the next burst is going to be to the upside. Australian dollar, pretty much the same thing. So Australian dollar has been in a meaningful downtrend, but in the bottom of the pandemic in March, we started to see this thing make a huge trough where it just created this bear trap where it went under all of these multi-year lows at around the 67 area. And, now it looks like a large bear trap. If you chased it, now, if you didn't get out, you're going to be in a world of hurt. So this is formed also in inverted head and shoulders. The thing is, the right shoulder is higher than the left, which creates this sloping neckline, which the implications of an upsloping neckline rather than a horizontal one is that not only is the implication of this bullish, but it could go very, very quickly. So another attempt back at this 74, you could see this thing really start to smoke through this level. So, Australian dollar looking very constructive here. You've got a key reversal and somewhat of an inside bar. We'll see how this week ends up. But I certainly would, get long at or around current levels. So all the the dollar correlated things, and I'll get to the yen last because that's kind of dollar yen doesn't always track or correlate the same way these other pairs do. So also with the New Zealand dollar versus US dollar, you have kind of a symmetrical. Now you'll see the horizontal head and shoulders. So you've got roughly the left and the right shoulders connected. So as opposed to the Australian, you have this horizontal neckline, which again, the implications of this is that it's an inverted head and shoulders. It's a reversal pattern, and reversal meaning that it's going to be a reverse of this trend and start going higher over time. So again, any thrust above 68 is going to start confirming this pattern, and you guys can expect to get on board and stay on board because these trends last a long time. Once dollar turns, it lasts 3, 5, 8, 10 years once it starts picking a direction. So lastly, we can look at the Canadian real quick. It's starting to look very much like a double top head and shoulders. We had a major double top right here at the 146. And now you've kind of got this head and shoulders going on in the short term. And again, anything below 130, it's going to start looking ugly for the longs in this. So again, this is the neckline, and any penetration below is likely to open up much lower levels for dollar Canadian. Dollar Swiss, I'm going to leave dollar yen for last. Also going lower, it's got this big, huge rounding top that's been forming for years. And, obviously now you can hopefully see collectively that the dollar index is pointing lower. All the dollar correlated pairs are looking like the dollar is going lower. And now it looks like, we're ready to roll over. This is kind of the last, means of support for, dollar Swiss before we perhaps retest some of these levels. So let me circle back to dollar yen because it's a whole different animal. And it does look, very, very bearish. It's kind of been holding on in this area, but, so again, I would just rather be long like Australian dollar versus US dollar right now, perhaps pound versus US dollar. So we've discussed this on and on, but some of you who are new, I'm just going to reinforce that, the way I look at markets is that I look at, patterns, trends, and price action. And the chart of the dollar yen weekly has just about everything that I look for in a trade. It started off with this classic double top where it went to 126, formed this M top, and then right around the same time it also formed this head and shoulders with the neckline a little bit lower. And so this basically has been directing the traffic in dollar yen, meaning I call this a governing price pattern. When you see a meaningful price pattern like this occur over a long period of time, it took this about a year and a half to form this whole thing. The implications, as you can see, are that this was a reversal. So leading up to this was a huge uptrend, and a reversal means ultimately that the market's going to reverse. And that's basically what we've seen in fits and starts. So every time I see, a meaningful rally in the dollar yen, I've been shorting it. Now, we're kind of getting into the mature end, the business end of some patterns here. We have this long-term descending triangle. And actually, if you look at it kind of another way, you also have kind of an ascending triangle on the longer term. So we're really at the mature end. And to to my mind, this still looks extremely bearish, notwithstanding the fact that we've had a couple of reversals, and I said this was likely to kind of hold prices for a while. And now, it's possible that you sneak back to the upside of this thing and do this sawtooth. So there's a couple of variations for dollar yen that I see. If we start taking out these lows again of the last two inside bars, then I think that we're ready to go. So it's very tricky right now. The dollar yen kind of goes somewhat counter to some of these dollar pairs. And you can see that we've just been hugging this downtrend line. So, it's not going to be too long before we kind of, get a result here. But the way I'm looking at these other yen pairs, they look higher, which means that dollar yen, by and large, probably should just, keep supporting. So it's kind of a mixed picture where there's a lot of bear signals, but you've got these twin reversals. And what I mean by a reversal is you can see the market made a new low and closed on the high, even though it's red, closed on the high of the bar. And then you have a reversal here. And, I said that was likely to contain price action, but I don't put too much stock in these reversals because once prices hit a certain level so many times, to my mind, I don't think that, we're going to see a sustainable rally out of here. But anything could happen. So I look at the market both from the perspective of opportunities, but also as, where the traps are. The market lays, various traps where your eyesight, catches one thing, but there's, many other things going on. So, within this descending triangle, I see this, double top. It's also called an H top because you have this funky price action here. So to my mind, that everything in the yen says that this is still, very bearish, but there's, other things going on in some other yen pairs that suggest that, the yen is not going to weaken that much. So again, I'm just kind of watching how prices play within the structure. So what I do is I kind of draw my structure. So you can see I have a multitude of patterns. I have this descending triangle, and I'm just looking to see how this thing plays, within this triangle. Does it conform to a bear triangle? Because these triangles can be somewhat neutral, or does it start coming out the other way? And I still think, we're going to go lower, but we may have another thrust to 108 again and do this, this slow dance that we've been doing in fits and starts. So this is what's kind of been happening, gets you in a trance. And every time you think, this time it's going to break, and that's, been my experience with the descending triangle. But, as we get closer and closer to the mature end of this, which we're still maybe, a ways, like I said, it could still do something like that. So I think it's just got to put some distance from here to go down. Prices don't just go down. So it's kind of tricky in here. And so, I'm inclined just to leave dollar yen alone for now. But watching it very carefully within kind of the way I look at the market. And, if we start getting a break through these prices, then I think it would be all over. If, it looks something like that, then I think, we would start getting some traction to the downside. So I'm just kind of watching prices and kind of alert to, any possibility right here, if that makes sense. So once we're talking about the yen pairs, again, I've shared with you, I've got, I've been looking at these things on the weekly. Maybe even worth it just to back up, and because I still, I don't know if we put on, if we're just putting on a short-term leg up and it's going to be a trap, or this is the start of something. So this is the monthly euro yen, and somewhat tricky. Obviously, somewhat in downtrend defined by lower highs, but also we kind of have this, uptrend with, higher lows. So it's going to be interesting to see, how this thing kind of wants to come out of here. And so this is a, long-term symmetrical triangle. I could make the case that this is a double bottom, but, if I see a double bottom, I don't want to see a case of, lower highs after that. So again, I think this is very tricky. We could have another, thrust maybe back up to, the 130 area. So, again, I'm trying to make up my mind, which is the governing price pattern. So sometimes it's very clear to me. And sometimes, you maybe just have to take the most recent pattern where we see this double bottom. We kind of, made this thrust above this neckline, but I don't know. I think it's very tricky, and these are the levels to watch for. So, see, some other governing price patterns in the form of this major head and shoulders here. And then you have this double top here. And we basically rallied to kind of the neckline of that, double top when this is the one I'm referring to right here. So again, it still feels like this is in a long-term downtrend, but there's some interim momentum, some interim strength, and we could see it, carry to, 130. And then if we start, taking out, this level, then, it may be indicating a shift. So, sometimes it gets a bit tricky. That's, obviously an understatement. So what I try and do is I try and go layer by layer and see what's going on in certain time frames. And so let me kind of put some. And this is where I get in certain conflicts with myself, and I'm openly sharing. Sometimes things just line up and they just look so clear. So, this is where, you get into some ambiguity, and, what I don't like about, ambiguity is that when the market kind of goes against you, you can kind of start making a case for the other side. And so, I just look for then certain price action to, get me in the position of what's been going on. So I have, kind of thought that, the momentum to the upside looks like it's still got some legs here. We set this double bottom down a while ago. We've kind of retested the neckline last week, and now it looks like we've successfully retested. So it looks like there's still more momentum to the upside here. So it's 130 is where that major resistance level comes in, or maybe even a little lower. So right around this 127. So it's going to be very interesting. Do we kind of top out there and go consistent with the long-term trend, or do we start breaking out, of the constraints, of the longer-term trend? So we're, at an inflection point in these yen pairs. I've been saying that for a while, and, can kind of make the case both ways. To me, this is still looks bearish. This still looks like, it's a long-term downtrend until, proved otherwise. And so this is where it gets a little bit tricky. So, you can make a case that, which are the governing patterns? You have this large head and shoulders here. And then you have, a set of bottoms here. So now it's kind of a war of these patterns, and you're sitting within kind of this triangle. And the good thing is that, we're at the mature end of this triangle. So we should be able to figure out how to make a lot of money, very quickly, So does this come up here and start looking like it's double topping? In which case we'll make some good money that way. Or does it start, thrusting through this? I'd be interested to see, what do you guys think? Which pattern is going to dominate? Where's the next breakout likely to come in the euro yen? So I'm throwing that out as an open question, and I'd like to see what you guys say. So Nicholas says, is the time a governing pattern will govern proportionate to the time span of the governing pattern? Not really. So obviously this one's a little bit tricky, where you have this major head and shoulders that took place over from July to over 2 years. So, this large head and shoulders should have given way to a major break thereafter. And the fact that we're still farting around here and haven't broken suggests that they're, maybe. So let's see. Wilson says, I'm bullish. Mauricio says it'll go down. Dan says long. Let's see. Euro's been depressed. Jan says recent Adam and Eve double top likely to go lower. I don't know if I see the Adam and Eve double top. Long-term downtrend looking to go short at 127. I see it going higher, but it's just instinct. I think Euro is still concerned. Yeah. ATN says looks bearish for me, but the W momentum higher looks interesting. So waiting to see, wise for now. So Christian says down. Anthony says I'm bullish. So you can see that this is how trading, this is how traders go wrong, when there's a lot of ambiguity. And so this is where you really have to step back and look at what's going on, what's governing the price action. And for right now, this is still in a downtrend until proven otherwise. And so, you can see that there's been a lot of, thrusts and parries, but, this is where you kind of get in me. It may even sneak out of here, create some kind of bull trap and then kind of come back. So like I said, we're in an interesting inflection point, but I think looks like momentum for now is still to the upside. That, I think there's some pips left on the upside. And, I would, view the 127 as really the area you can see that there's a couple of areas of resistance right here. We hit there, but, again, if we start coming back up and, when you start banging up against certain resistance point, eventually it, gives way. So, and again, this could just mean that there's also a lot of just back and forth trading in here too. So, I'm still, somewhat bearish, but I think that there's some pips to be had on the upside. I think the momentum looks like it's still, on the upside, but, obviously it could turn into a trap where, the momentum gets going and then by the end of the week, it comes lower. So again, I would get long with some kind of trailing stop and, take what you can. But it feels like, again, there's just continuing momentum to the upside. So to answer the question about the governing pattern, how long and whatnot, when we look at the pound yen, you can see that the governing pattern has been, in force and effect for quite some time, and it has really governed or dictated the price action. So you can see that we have double top, head and shoulders. If you took this, that's $70,000 for every $1,000 you put up. And, then it's, so it's really governed and dictated. Once that head and shoulders was confirmed, you can see that has, governed and dictated the price action for 5 years thereafter. But that was then, and this is now. And so, we've had this rounding top for quite some time. And within the rounding top, we had, sorry. This is an interim double top within the long-term downtrend. So that, you had a spike against the long-term trend, then you had that double top, which indicated we were, going to go back in the direction of the trend. And now is a question of, what's going on here. So, you have kind of this trend line kicking in, I'd say around the 140. So it just feels like momentum is going to carry us close to 140 again in pound yen. And where we go from there, it still looks like this is a long-term downtrend. So you can have these, counter trend moves that are, really, obviously you got to be quick. I mean, but that they are fertile. Again, I can't really look at this and make the case that we put in a bottom. So when I want to see that, something is reversing, I want to see a shape or a form. And look, I guess you could look back and see, look, if we took out this and, it looked like that, then that would very much look like a bottom. But, again, when you take so many pokes at, I guess it hasn't been that many. This is somewhat of a triple bottom. But, confirmation would only be, really above the neckline at 150 or so. So, maybe we are in the throes of, turning this thing around. Maybe this is, the makings of a double bottom here. I don't know. I still feel like this is just going to be kind of a knee jerk in a long-term downtrend. But I think there's still, 300 pips to be had here. So it's just a dangerous game. When you're playing the counter trend game, it can snap against you very quickly. So you're long, and, you don't get out, and then, it snaps. You can see here, you're long, obviously it gave you some time to think about it, and then it goes in the direction. So while there may be 200-300 pips here, you could get one of these. So I don't know. I spent a lot of time looking at the yen price action. I am lightly long euro yen, pound yen, but I still feel that the major direction is lower until proven otherwise. So if we start taking out perhaps this 145 area, it would start suggesting that you have a turnaround from the dominance that was, created by this pattern, and maybe that washout low. And whenever you get a washout like that, it just suggests that, it is going to start going in the other direction. So, in March, the pandemic, created a lot of price action where, prices went where they needed to go and then created this trap almost where it got a hair under the 125 lows. And if, this is just a big bear trap. So, this may be the beginning of this. I'm starting to get that feeling. That's why I don't want to go short dollar yen. I just feel like the yen still wants to weaken here. So Mohammed says, I'm long euro yen. Who's bullish with me? So I'm still on the long side. And, the problem is every time it goes down, I start getting worried. But the thing is, what I do is, I kind of, like last week, I was long and let me change the color. So what I do is I look at the bars and I try and make sense of, where something can go, where it's realistic. And what I mean was, like last week, we were going higher. I was long pound yen. And then at some point, it started driving lower. And I said, does this look like this thing's going to go through here? And this is what I do. I kind of, draw on the charts. I visualize. I do a lot of visualization. So, on like Wednesday of last week, it started looking like that. I was long, it came off, it gave you a huge false look. And I said, I'm just, not believing that it's going to go through here. And so by the end of the week, it was right back up. And so this is why it's difficult to follow even daily price action. Never mind 15-minute. If you're trading this on a 15-minute time frame, you would have been just bashed around because the volatility has been incredible. But if you slow it down and just look with what's happening in the weekly time frame, it's like I can't see a bar. I can't make the case for like next week it doing that. So sometimes I try and visualize and take the devil's advocate position. And to my mind, the momentum just feels like, it's going to carry. Whether it stops and turns, I don't know, or, this thing is real. Which, by virtue of that trap, it suggests that we could be looking at a real turnaround in these yen pairs. And I've been saying, for a while that the yen is at an inflection point and that, you can see that we've been hugging this ascending line. So, even if you get a retracement here, just watch this line carefully because it's, it could hold. So I think, I would look at buying pullbacks right now in pound yen, euro yen. So Marjan says there's too much going on with the pound because of Brexit. I don't trade it now. Well, to me, the market is a discounting force. And so that's the folly of looking at news, because by the time the news comes out, the market will have already moved. The market will be ahead of whatever the outcome is. Yes, I realize there's a lot of volatility that's created because of it. But if you just keep your eye on what's happening, then and set wide parameters like 300 pip stops with small positions, then you can take it. But to me, the momentum is still higher. All right, we've talked a lot about the yen pairs. Let's go to pound New Zealand. Again, not quite sure. The short-term price action is very bearish, but if you just look at it in context with what's going on, it's still within the cadence, just consolidating this weekly double bottom here. So to my mind, pound New Zealand dollar has staked out a number of bullish price action charts, and so we've kind of got a key reversal going on in the weekly, but you can see it's just kind of coiling in here. It looks terrible on the daily, certainly on the 15-minute, but if you look at it in context with this chart, nothing really has been broken just yet. Now, I'm not ruling it out. I mean, today's action is pretty ugly, but you are still, you've held every time, along this trend line. And so we are still looking at this emerging double bottom, although, price action today has been tough, for sure. So I don't know, again, here's the thing where you have that double bottom all the way back there. Is this ruling the roost, the double bottom, the rounding bottom, or is this, going to be a head and shoulders? And, we get through here and then, it looks ugly. So, this is what the market throws at us. And, again, if you're unsure, like Marjan, then, the best thing is to stay out. I'm still long. I've kept pretty wide stops in this thing. And, we'll just see if it just holds in here. So it looks really ugly on the daily. But you can see that really we're just kind of coiling here. So we'll see what happens next week. We still have this, as, to my mind, the ruling pattern. But, if things start, collapsing, then it won't look so good. So now I'm tentatively, I'm long and not loving today's price action. Let me just add some time here. So you can see that, again, this looks like the bigger picture. This looks like a very foreboding, head and shoulders, which it may turn out to be. And this is why, to my mind, I look at these longer term timeframes just to see, what's going on. And so the weekly, has kept me on the straight and narrow, meaning that every time, I see these massive sell-offs, to me, those look like opportunities along, weekly long-term uptrend line. And so, right now you've got this head and shoulders, but you've also got kind of this Eve and Adam double bottom. So which one's going to rule the roost? I mean, this thing looks very foreboding. Looks, giant head and shoulders thing that should, translate to something like that. And it just may. So today's price action is, pretty ugly. And if you're long, you may want to just, get out and reassess, because we're really at a, critical juncture. I knew there was going to be some resistance at the 197 area where we hit before, but I kind of didn't count on this kind of look. So, I've got some stops not too far away from here. If you guys want to jump out, you certainly can, and reassess. So I still, kind of looking to see if Humpty Dumpty kind of, keeps himself together here. We still have somewhat of a V bottom going on here, but we're starting to look like there's some resistance here, which could drive prices back down. So Michael says, you were pretty confident in today's YouTube. Yeah, I was. And, I am not perfect. I've had a pretty good run, but this month it's been difficult. There's been a lot of volatility, and it's been really difficult. So, I've had 6 or 7 straight great months, and, I'm struggling this month, and that's fine. The more I struggle, the more closer I know I am to a good trade. So, yeah, that's which is going to rule the roost, the long-term, uptrend line that this is sitting on, or this large, head and shoulders. And objectively, based on this daily chart, you'd think that this head and shoulders is going to throw prices lower, and it may happen where you kind of get, another look here. So I would, if you're long, I would just kind of get out and reassess. Pound Australian is starting to roll over too and look pretty ugly here. So there was a, kind of a governing bar right here that, that reversal right there was sitting in the way of any kind of progress to the upside. And again, I was wondering if this is going to turn into, if this was a double bottom, but this didn't ever get confirmed. Confirmed means you go through the neckline. So it's going in the direction of this trend. So I'm kind of I would just get out of all of these trades and reassess. So right here again is the confusion, where the long-term downtrend in Pound Australian is much lower. And, we've been held together for some time by this triple bottom. But now this looks like, very much like a Head and Shoulders. That is, so this is where, it gets very tricky. Which pattern do you use? Which chart do you use? Which time frame do you use? There's obviously bunch of support at 175 and just underneath there. But so again, I try not to make this into rocket science. You have this inside bar, and you could probe this and just put a sell stop here under this week's low and see if there's any traction. Again, what I try and do is I try and paint, and I say, can I see prices fall against all of this recent price action? What I typically want to do is I want to see prices build away. There's a certain aesthetic. So what happens, prices fall, and then they build space before they can fall again. You can see they built like 4 or 5 weeks of going sideways. So for this thing to go straight down like this, I can't really picture it in my mind. That's why I think there may be a trap in here that may turn into a double bottom, and we may be, back up. But it looks ugly right now. So, even if I was going to bet on this thing going down, I'd want to see a couple more, things before it kind of builds some space to go lower. So, it looks ugly right now if you're long. So I would just get out of everything and reassess. All right, let's go on to oil. I know there's a question on today's elite question, so maybe I'll just answer it right here. Oil's just been kind of a tricky thing. Again, this is what you get where you get a short squeeze, where obviously, prices can't go lower than zero. Although on the spot contract in the commodity market, it went to minus $37 when this went to zero. So, prices can't go any further one way, they go the other. And so you had this, giant short squeeze. And so I'm kind of looking at this coming up here and retesting this, and, it doesn't look sustainable, but what do I know? This is a crazy chart. You had all the implications of that double top, triple top, the Head and Shoulders, and it kind of played out. So when you see these patterns, like pound yen, you see the implications of the pattern, and they played out. This went to zero. So those bear patterns were, what they look like. They were extremely bearish at the time. And again, that was then, and this is now. So, we may I'd like to see what we do around this neckline around 45. Either we roll or we go the other way. So this is kind of how I look at the markets. It's a dance. The market's put on certain levels, certain areas, and then I look at how the market responds in those certain areas. And so right now it's pretty ambiguous. You make the case for either way. And so what I try and do is I just let the market, kind of give me some price action or pattern that I feel like I can kind of get behind. And right now you've kind of got this little double bottom in the direction of this momentum. So the momentum is still higher. So, sometimes if you're looking just to catch a momentum trade, take a couple of bucks out of it, don't fight it. The price of, path of least resistance, is higher. All right, let's get on to silver and gold. I'll start with silver. So, this is kind of in no man's land. This is just, a lot of volatility, a lot of thrashing around. I was saying, at this juncture when we had this expansion of volatility here, these massive bars, that it was time to get out. And, I've been, on the sidelines because, I also said that, when things fall this way, they don't just kind of, again, keep falling against, current prices. But I don't know. I still feel like, we broke out of this symmetrical triangle and, maybe, we rally back to it at some point before. So this is just, very difficult to handicap. I kind of felt that, this bar was exhausted, this down bar, and that, there was not any mileage to, shorting it. Let me just dial back to the daily now. So we've kind of have this symmetrical triangle. It's much more clear on gold that we kind of broke out of. And so, we may rally to the breakout point, somewhere in there, 26. I don't know what's going on here. It's kind of in no man's land. You do have, and again, this is kind of, you have this double bottom. And so the path of least resistance for now is higher. I just feel like it could really be a trap. And so, yeah, there may be some, more mileage on the upside, but I don't know. I'm not dancing with the devil on this one. Gold really sprinted out of here. But again, I just think that, we're at, a major inflection point here. And I think all we did was rally to the breakout point of, where's my, there it is. So we had this symmetrical triangle, and really what we've done is we've broken out to the breakout point. And I don't know. I'm still feeling that this thing is going to go lower. We're at this area and we retested this area right at the breakout point. So let's just see how we close today. We're kind of in no man's land, kind of up, down, sideways. You had, I saw the support here. I saw that it was likely to retest this breakout area, but I think we go lower. Let's see how we close. I really look at how a market closes relative to the high and low, and the close is going to be, very interesting to me. We also have kind of this downtrend line that we snuck up a little bit. And so, I don't know. I still get the feeling we're going back to 1750 on this thing. But, again, you have this double bottom, and I said that there was likely going to be support right around this area. That's why when I was short, I covered my shorts right in this area. And, I had a feeling it could, definitely sneak back in this triangle. I think we're kind of forming this descending triangle also. So, I don't know. To my mind, you could also do this. Yeah, so let's see how we close. The close is, really important. That's why, I focus on the close, what it does here. Again, we had this reversal right here. We re-challenged, we, got above here, and, I have a feeling this is going to be a bull trap here. If you chased it, you may get hurt. And I may be completely wrong on this one. It's hard. It's just in no man's land. It's, like I like to see something where So, I mean, I don't even know how to really came to this kind of trend line here. And I don't know, I just feel like you're going to come back to this breakout area where you broke out of. Markets usually retest levels. You can see it kind of broke out of here and then retested it. So I don't know. I think time will tell, but I'd be careful up here. So Gert says, is gold forming a cup and handle on the monthly? Not quite sure what you mean there. Cup and handle on the upside. I don't have all of the monthly history here. I don't know how much history this thing will give me. Not a lot. So I can't really see the cup and handle. And I don't have more history than this, so maybe you're looking at much longer term. So, I mean, I just see that, it's at a very tricky area. Whenever you kind of, hit an area that you've hit before, and especially kind of the price action here, where you had kind of a key reversal. So yeah, this is just kind of getting back into the, into the thing, but it could still have a lot of room to, to come down. So I don't know. This could turn into a bit of a bull trap, where if you bought above here, you may, I don't know. My instincts still tell me that this is lower, but the price action is obviously very formidable today. But, sometimes you can be entranced in, these big moves. Like I said, let's see how we close. Right now we're $10 off the high. So I'm going to just let this play itself out a little bit. Obviously, with the implications of a lower dollar, I mean, it would suggest that gold would go higher. But I don't like to play those games. Clearly that is the case. And, this has kind of staked out, the thing is, right, so we see these patterns. This is a double bottom. But what I see within that bottom is, a continuum of lower highs. So when I see a bottom, I want to see kind of that kind of look, rather than, you make a bottom, within the continuum of a lower. So again, probably need to just step aside this, see how it plays out in here. And we've got this triangle. So if we start breaking out and the dollar starts looking weak, then we could have another thrust. There's no question about it. So it's just very tricky in here. And I'm just going to see how we close today. If we close, above this neckline, and we have this nice looking bottom, and then we start, keep getting traction next week, then, I would likely get on board that. I just feel like there may be a trap in here. Okay, let's take a look at the stock market. This is just, we had the double bottom here. The thing is, when you look at the daily chart, just the price action along the trend. So this is obviously a major trend. And then, at every juncture along this trend, the price action has told us, what's kind of going on here. So, you start with the key reversal down here, and you had, what I mean by key, made a new low, close on the high, made a new low, close on the high, made a new low, close on the high, made a new low. And every time it did that, it made, higher highs, made a new low, close on the high, made a new low, close on the high. And then we saw these two guys right there, two reversals right at this double bottom. And now you've kind of got this inverted head and shoulders looking thing. And so it looks like you're going to re-challenge the high. Now, the interesting thing is what happens once you get into kind of this kind of stratosphere. Does this turn into, but this, I don't know. It just looks like the path of least resistance is continuously higher. And you can fight it. What kind of bothers me about chasing it more and more higher is this parabolic look, where it's just gone straight up, since March. But, the path of least resistance is higher. You can't fight this. Can't fight the tape. So it looks like we're going to, go and at least re-challenge those highs. S&P on a way to re-challenge the highs. And then, it's always interesting to see what happens at those high areas. They could turn into meaningful resistance, but I don't know. This thing looks like it just wants to keep going higher. The Dow has not made new highs, even though the S&P and the NASDAQ have. And at this point, I don't know how much to read into that or not. So this looks like it will challenge its highs, and we'll see what happens there. But again, the path of least resistance is lower. So let me just kind of get to some elite questions, and then I'll get to your general questions here. These are people who aren't our daily elite member. So Jan says, I've been actively trading gold this week. At some stage, I was in the positive, and the next day greatly into the negative. I know what parameters you decided. I know, or I don't know if you meant to say I don't know what parameters you decide to get a trade. You told us that the take profit is set arbitrarily. When I say it's arbitrarily, what I do is if I get in a trade, I put a take profit kind of at a place where, look, if kind of far away. So if I think that I'm going to get a move, I ironically don't want to be so this is looking really ugly on the daily. If I kind of get in here at what I think is a bottom, and I think that this thing is going to extend, I might put a take profit somewhere arbitrarily up here, and then as the price action kind of shows me that this is looking like, then I might just move that take profit. So when I say arbitrarily, it's like I kind of put it at a point where I can see what how the market's going to respond to my trade. And if sometimes I put a take profit 300 pips away or 400 pips away, and it gets taken in a day or two, I can't be upset about that. But really what I'm trying to do, I'm always trying to tag the bigger trades. And that's always, they don't show up all the time. And so I may have other trades where I would have, some other interim goals, and the take profit would be, lower, and it would be around certain, key areas, support areas, or so you asked about gold. So why don't I kind of reference gold? So to me, I always try and get with the trend or a pattern or something that. So I took the long side of silver all the way up on the ride up. And then when these started forming these, triangles, I was saying that I was, increasingly getting bearish for, several weeks. And started looking at this symmetrical triangle. And right at the 1950 area, right when it broke here, I got in at like 1921. I actually missed this Friday close, and I got in whenever it was, when it broke under here at 1912. And took a nice ride to the downside, and I kind of thought that there would be some support right there. How much support, what that support would translate into, and you can see you kind of had a double bottom here with the nice reversal price action, but you can see it's not been easy. It's been burst out of here and then came back, and so I've kind of left it alone, and I'm still kind of inclined to leave it alone, just because it's so ambiguous in here. I mean, but the fact of the matter is, this is an uptrend, and so if you decided to get long, then you'd have to say, well, kind of the next threshold is around 1960, 1980. So that would be what my take profit would be. And then if the market started really showing that it was kind of thrusting in a certain way, then I might move it to 1980. And if it kept thrusting, and then I would keep going and keep taking away and let the market continue in the direction. So, I kind of put a take profit somewhere where I can then take a look at it. So let's just say, we're going to go long on this trade at 1920. I put my, take profit like around 1960. And then kind of see, if this thing starts failing, then, I would obviously do other things or just get out of this trade. If on the other hand, we start seeing it kind of, going that way, now it looks like it's really building momentum, then I'm going to, cancel this, put it a little bit higher at 1980. And then, if it still feels like it's, a robust trade, then, I'll start moving my stop dynamically or my take profit. So it really depends on the trade, where I'm getting in a trade. And, if I can get in early, I usually like to get in when, something turns. So if this is going to turn the other way, I want to, get in at that time and then put my stop loss and take profit accordingly. So it's really a kind of a dynamic thing. And, it is arbitrary. When I say it's arbitrary, I kind of look at certain levels. So, if I put my stop at 1960, that's 400 pips away. If this thing goes up the next day and cracks me out, then I'm not going to be unhappy about taking 400 pips. But, if this is going to turn into a bigger move, then I'll, kind of dynamically move my take profit. So hopefully that made some sense. So again, says, and this is a good question. How do you think we should manage trades which are running in the green? Should we set a trailing stop loss, or should we leave the stop loss as it is, for example? So, pound New Zealand, I've got it lowered 194.69 or 70.67. I would just get out of this trade. It's just starting to look ugly. So, I have a daily email. I don't want to email every minute of the day. So for the most part, you can leave your stop losses and whatnot. And it may be the wrong thing, to get out of this trade. I have it at 94.60. It may just stop here and go back in the direction of the trend. But this is starting to, this resistance area is starting to look like a real resistance area, and, starting to throw prices back. And so it's a choice. The stop loss is not too far away from here. But prices look, pretty, ugly right now today. All right. Augustus says, what is your view about crude oil? I basically went through that, Augusto. Hopefully that was satisfactory. I think right now the path of least resistance is higher. I think that 45 is going to be a critical area. May says, I have a gold short at 1850. May, I think I said that was a kind of a critical support area. I bailed out of my trades just because you can see right here, even though I was, very bearish in, this time frame, I had my take profits again right around this area because, I saw this guy there not too far away. So, and also, prices just don't fall out of the sky. They take time to build. They need to build space in order to go the other way. So, if you're short, again, we are at a critical inflection point. How this plays right here, but this is, starting to look like it's firming up. And so, this is kind of my structure. This is where kind of the, this line comes in. We've basically broken it. And with the dollar weakening, I don't know. Again, you don't want to hold on to a losing trade. If you're taking losses, it's just much better to get out of a loss and reassess, even if it starts coming back down again and you need to short it. I know that sucks, but sometimes you just need to clear your head so that you can see the next trade. When you holding on to it, and I think, May, we talked a long time ago, you were in another trade that you were holding on for a long time that was against you. So if I remember, May, you tend to hold on to trades. You get an idea or you take it for a certain reason, and then when it goes against you, you hold on to it. So I just tend to just get out of trades just very quickly. When they don't look like they're working, just dump them. It's a really good process, because what happens is you hold on to that one trade and it really works you. So, right now, gold is it's looking fairly robust. If it's going to turn, it'll give me a sign. It's in the middle of the tennis court, right? It's nowhere. It's very difficult to handicap at this point. You've got what looks like a bottom or a series of bottoms, but you've also got a series of lower highs. So, if we start kind of doing that and it starts, breaking the cycle of lower highs, then, that's one thing. So it's kind of really at a prove it stage right now. I mean, we could, get another fake out next week and it could look like that. But with the dollar looking weak, I don't know. This is, so Michael says we need some monster trades to wipe out these last 2 weeks. So these last 2 weeks have sucked. And, so Michael, again, you just have to be very patient. So you can say when you wait for these monster trades, sometimes, and I've said this, I said I can go through a month, I can go through a quarter where, the market's just going to a volatile stage and whatnot. And so, and again, as we get closer to November and the elections, this volatility may persist where you don't, get any kind of throughput. It's just these giant cuts both ways. And yes, I will find the big trades when they appear. And that's why I look at, all the things. I try and break down the like the yen to see where these areas are, where they set up certain, things where it looks like there's momentum, but, the downtrend may dominate. So yeah, you just have to, again, what I try and do on these sessions is try and give you guys an idea of the big picture. Sometimes that picture is not clear. And right now, I think the picture that's emerging that is getting clearer is the dollar is getting weaker. So, that was really kind of the theme today, is that I think that I think the big trades, are going to be in the dollar. The dollar seems to, it's got this head and shoulders, and I think in fits and starts. Now, the dollar can also be, very choppy. And I don't know if we're just going to cut through these recent, levels that so sometimes when we, have some recent price history, it doesn't just cut through it. But I think in fits and starts, if we make lower lows next week, under this coil, you've got these two bars here that are just coiling. It just does seem that the direction of the dollar is basically underpinned. And so if you have patience and wide stops, I get long Australian dollar US. Maybe pound. And then dollar yen is, very kind of tricky right now. But if the dollar is going to go down, I mean, you could just put a sell stop under these two lows. Just put a sell stop around 104.85. And if it puts you in, it's probably going to be a good trade. And you can just leave that there. And if the thing takes off and goes to 108, what do you care? You want to put in there. So you could, kind of leave a resting order underneath to see if you're triggered. But I do think that you need to just focus on where the risk reward is. So I think for like Australian, US, it just seems like the risk reward is increasingly favorable to get long. So this could be a big trade. And I think, we've already seen the lows. So, to my mind, if you're prepared to, risk to the lows at 70 and get in here, I think you could, get a good trade. Yeah, I did get out of my pound New Zealand trades. I did not get out of pound yen. No, that still looks like it has momentum. And by and large, if you look at the weekly, it's still okay. It looks terrible on the 15-minute and the daily, and I kind of have a hard time. So I would just leave the stop as it is. Just leave the stop as it is. I don't know. It's clearly this is a reversal, and if it gets really ugly today, and we really go into a red bar today, then it's going to look really ugly. I mean, we have a real reversal, and if it goes lower, and we look like that by the end of the day, that's going to kind of change the whole thing. If we kind of hold where we are, we've still kind of got these higher highs and higher lows for the last 2 weeks. Even though we're closing on the low, it just could be, kind of I don't know. You could pair your trade, take half off. Mohammed says, I'm bearish New Zealand. Let me just get through the last things. Trevor says, I would love to know your reasoning behind closing trades, pound New Zealand on Wednesday and your NASDAQ call. Should they be entered during the American times and avoid the Asian session? Yeah, that NASDAQ call went out, and our emails got held up. I remember that day, and the markets had already gone through the stop. So when something like that happens, you don't want to chase that a market at the end of the day like that. I've always said I prefer for markets like this, what I want to do is have the market go up in the next session, and then have that energy release. So don't just automatically put it in when you get the email. Wait to put it in if the market is like on an absolute low or high. You don't want to just kind of just put it in the high, have the market reopen here, and then do that. So yeah, best to put your orders in after the reopening. Duncan says New Zealand dollar Canadian, New Zealand dollar Swiss looking bearish. What do you think? I'm not so sure. New Zealand dollar Canadian, it looks like it created this bear trap here, this short, and it could turn into a short squeeze. I'm having a hard time figuring out New Zealand dollar Canadian, because you kind of broke this major thing during the pandemic by just a little bit. These bear patterns should have really sent this thing much lower. But, it could be a fact that it's just a delayed thing and we're going to go back. So right now, you have this short squeeze. You have this, kind of bear trap that was sprung. And so my inclination is that, it's probably going to hold, that, this may look like a double bottom long term. So I'm a little bit unsure here. I said a couple of weeks ago that this is definitely a resistance area. It's at 89, but you still have a case of these, higher lows. So if you start, making some lower lows, perhaps, then this would turn into a double top at 89. And so I'd be more inclined to wait to see how this plays out, and more inclined to short at 86 than right now. But it's tricky. It's a difficult call. And sometimes when you get these trades that are jammed up, so this looks bearish. This looks, like there was a bear trap sprung, but there is kind of a dominant downtrend line here. But if we start, sneaking above here, then, this could all look like this does look heavy and bearish, and, it's by and large lower highs. You kind of had this channel and you just snuck out of it. So yeah, to me, this does look bearish, but I don't know. It's a difficult, these Swiss trades are difficult trades to play. But on balance, I would agree that, I think the path of least resistance on this looks lower, unless we start, breaking out of this downtrend line. So I don't know. Not crazy about that one. So for me, like kind of Aussie dollar going into next week looks like the best risk reward. And a lot of these things just may not play out or pay off right now. The market may be waiting for the US election, before certain things happen. So Guyan says, on difficult trades, wouldn't limit orders be better than stop orders? And that is a great question. And I had a limit order to sell gold the other week, and I was right on, except gold came right back in my face. I was right on. I don't know if you guys are on my gold list or get my trades, but when was it? I think it was, yes. So I actually did that. And the difficulty is, so when did I do this? So yeah, it was right after. So when I saw this large reversal, let's see how large that is. To me, to put a stop order here under here is just folly. Because when you see these large ranges, typically the markets come back into the range. I'm trying to think if this was the day or not, because I actually got some traction out of that. So what happened was I put in a limit order to sell it at 1896. And it did drop off quite a bit. after the limit order was triggered. The difficulty with a limit order is, okay, I had it right, and it went to about 1897. I mean, I got this thing, and it's just a guess, how far the market's going to retrace and where to put the limit order. And that's the problem with the limit order. So let's say I was correct. This was going to go down, and I had my limit order at 1896, and let's say it goes to 1892 and then goes. So the limit order A is very difficult to assess, where prices are going to retrace to, and then how far are they going to retrace. So where do you put your stop loss? I mean, I'd have to put my stop loss all the way up here. So I don't typically do that, but that was an example where, the range was so big, and I thought that the next move was going to be lower, and I wanted to catch the move, going higher. And I did. I actually had like $10, and then put my stop, and then I brought my stop loss way down. So when I put the stop loss in at 1896, I don't know what my stop loss was, 1907 or something. And then when the thing went down, and it was slightly down for the day, I had like 100 pips, or 80 pips rather. So I got into 1896, it closed at 1888. I had 60 or 80 pips in the trade, and I said put the stop loss at break even. So I moved the stop loss down. I kind of felt like if this didn't go, then it wasn't going to go. So yeah, I do move around my take profit and stop losses, but it's very difficult to, so say you want to buy gold, but you don't want to chase it here. You want to put a limit, wherever at, I want to buy it at 817. Let's say it goes to 1919 and then moves. So the thing with stop orders is that I know that if what I'm trying to do is catch the momentum in the direction of my trade. So for instance, right here, you have an inside bar in, thing that broke out of this thing. And I wanted to, catch the momentum. So I put a sell stop under the low. I remember it was like, 1894 or something. So in that case, where I saw that inside bar, I put a sell stop there because, let's say I put a limit order up here. And it retraced a little bit, but it doesn't get my limit order, and then it goes down. So a limit order, it's, you're trying to handicap where that thing is gonna, stop and then go back up in your direction. So I don't do it too often. I only do it where, let's say today is a big range bar, and I suspect that we're gonna get a little bit in, into the range. Then maybe you could, put in a limit order, at 1918 or something, try and catch a little bit of a down move against you before it goes. But it's, it's very tricky. I prefer to catch momentum. So, really, it's, I don't like to kind of put a buy stop right there. And if I did put a buy stop there, don't just automatically put it in. And in the next session, if it opens here and starts going up, yes, you could catch momentum and it could just keep going up. But by and large, what I want to do is I want to see just a little bit of, retracement before, so I kind of get that energy, that coil. So I don't know if that, makes sense to you guys. I've explained it. So pound yen is, soaring right now. So I do think there's a lot of open space here. I've been saying it for the last couple of weeks, and I think that, even if there's resistance, the resistance is going to be somewhere up here. So you kind of have this interim, head and shoulder, inverted head and shoulders. You broke out of the neckline. You had this double bottom here, and a lot of reasons, that I pointed out why I just felt like it's going to come somewhere into this space. And maybe a lot higher. If this is a real bottom, maybe if this is a real bottom, then this is, got infinite potential. So again, yeah, it's very difficult to put a limit order. And what I prefer to do is catch momentum. catch the trade as it's ready to go right in the direction that I'm looking for. So for instance, even, looking at the pound yen today, you've got these kind of two bars where you had the reversal and then you have this inside bar. So you had kind of two inside bars, and now you're taking out the high. So you have all of this coil, all of this energy, and I wouldn't be surprised to see this thing, just really go higher. Michael says, hey, do you consider 15 to 20% drawdown normal? Yes, I do. The beginning of the year, I was in a 15 to 20% in January and December. I was in about a 15, 18% drawdown. And then I just tagged so many trades, and I was up like 300% by March. So, you can, yes, I do go into this month, has been a very difficult month. But I actually haven't come back into too much of a drawdown. I mean, I'm looking at my account now and lost about 10%. I've lost 10%. But I'm not worried about it. I'm not, it just means that I'm closer to, a good trade. And who knows, this pound yen, by the end of the month, I could be up. It's early in the month. So, I'm still plus on the day, even with my pound New Zealand trades getting pounded. And actually, pound New Zealand's coming back a little bit. So I'm actually still in the plus. I've got 2 pound New Zealand trades, which are about break even, and then I've got a pound yen trade, and I'm up on that. So, this looks like it's, like I said, the path of least resistance. We can speculate how far it's going to go, but I think there's just momentum, and with this kind of thing, just see where the momentum carries you. And I think it's got 139, 140, 141, 142 in it at least, and then let's see what happens. But as it gets close to 140, you can start pairing out, because you could get a very quick reversal at these. So this is just the area to keep an eye on. Right around up in here. So around 140, you can start, pairing maybe positions, but this could be a thing where you get one of these. I don't know yet. So I just think that there's, a couple hundred pips still to be had on this thing. And I think we, kind of get somewhere in this area, if not higher. So that's why I'm really keeping an eye on these yen trades, because we are at an inflection point. Euro yen and is really close to this pivot point. So right now, that's kind of where I'm at in a few pound New Zealand trades. Let's take a look at what's going on there. And, it looks ugly today, but like I said, on the weekly, it's still, it's got a higher low than last week and a higher high. So, I still have hopes for this trade. But it's just, these pound trades have been really, really volatile. And that's why you kind of have to keep an eye on the big picture, figure out what your objective is, and what your risk parameters are. And so I think for these, because they motor around 300 pips, you really have to have wide parameters. And my stop was just a hair under today's low, and it looks like today's low could hold, and it could be good to go. So I'm looking at this, and right now the integrity of this bottom is still intact, until, it's threatened. So next week, you could start climbing out of this. So that's why I wait for the close. I mean, a half an hour, this thing looked like a disaster. It's trading at 95.05. Now it's starting to climb back into, the pink here. And, let's see where it closes. If it closes somewhere in the middle here, it's going to be not so bad. And the integrity of this pattern is still intact. Calvin says GBP NZD is not for the faint of heart. So I always say in my videos, man, this is like, like a fireworks warning. It's like, it's not for kids. Yeah. So, and this is the folly of looking at, short-term charts, because, it's just up and down, especially the pound yen. The pound yen has been ridiculous. Let me just put on a few days. I mean, now it's breaking out, but prior to this, it was, just huge. You can't really see it. So, I mean, it just, went in these ridiculous kind of swings, where if you're looking this short term, it's really going to cut you up, where you've got a great, great trade, and then it's down here, and then it's up there, and then it's down there, and then it's up there and down there. So you start losing your mind on something like this. Very difficult to see what's going on long term. But you can see even within this chart, you've got higher highs and higher lows. So if you're just keeping the cadence of that and looking at that, you could have bought along every place along this. So I do think that, the momentum is to the upside. I've been saying that, there's a paradigm shift coming in these yen trades for the last couple of weeks. And while it might not be a paradigm shift, I think that, you certainly have the momentum. So there was a double bottom in an earlier time frame, which I didn't capture on this chart, but this to me was kind of this double bottom, like almost a cup and handle. So here's a cup and handle. So there's a cup and handle. So that's a bullish reversal price pattern. And you re-challenged it here. I love when you re-challenge these necklines and then it gets going, because when it gets going the next time, it really gets going. Let's see, XAU is going higher, heading to 1950 due to a double bottom. That could be entirely true. Friends, the stock market closes 4 p.m. Eastern Standard Time. Mohammed wants to look at Australian, New Zealand. So, not a pair that I really watch a lot. I do watch when I'm looking to put on a pound odd or a pound New Zealand, which one is kind of looking weaker or stronger. And probably need to go to the monthly to kind of check this, so I don't know. It's again, what's happened here, just like the pound yen, is that we've had a dominant position for the dominant chart pattern. And now we could be in the throes of, changing direction. But, you can see that this is not real fertile. But on the main, it looks like the momentum, is higher. So you have this, couple month coil, and obviously this month is not over. So it may look very different by the end of the month. So on balance, it kind of feels like this thing wants to go stronger, that the lows have been put in, but so I would say if I had to pick a direction, it looks like it's going to go higher, but a difficult pair to trade. So I think I've answered all of your questions. So I think with that said, I'd like to wish you a great rest of your weekend and a great trading week. And it looks like pound yen we saw the cup and handle. The momentum is to the upside. I think 140 is very realistic. And the Australian dollar, US dollar looks pretty, like a really good risk reward trade. Yeah. So again, I understand it's discouraging sometimes to see these trades, because I had 2 trades in pound yen that got ticked out by five ticks or 2 ticks, only to go in the direction. So I don't know if I need to set, wider stops, and that's probably the only way to handle these markets. It was right in this area where I had a trade long here and a trade long, a trade long here, and perhaps a trade here, and they both got stopped out by 5 ticks. I think, so, the market ended up going in the direction I was looking at, and, got stopped out on both those trades. So, that just blows. But look, this is the long game, and I've been through difficult weeks, months, quarters. And I remember all the way back to the Brexit. When was it? 2016, the summer of 2016 after Brexit. The volatility dried up in all of the markets for like 4 or 5 months. It was the lowest volatility in 20 years. And, that was a tough period to endure. And then in November, I made 1,400 pips. So, this is the long game. And you kind of have to look at it that way. And what I would what I'm trying to do is give you guys, a feeling for what I'm looking at. And if the integrity still looks like it's holding, and you got stopped out, then, you're free to, what I want you to do is start, making independent judgments based on, these kind of assessments. So to me, once we see things are in a certain mode where, this is in an upswing and there's so much, what I try and do is play that devil's advocate and say, can I see prices going like that? Or does it look like there's some white space up in here that this thing needs to go into? And not only that, I mean, that's very, but, I start off with the integrity of kind of the prior patterns, the trend lines. And if that all holds, together, yeah, I mean, you saw giant whipsaws before this thing got going. But by and large, if you understand the bigger picture, and this is, I think, bullish until proven otherwise. This is the momentum, the path of least resistance is higher. Is that then, you should be able to, enter trades and, make your own determinations, also. I don't want you to exclusively, rely on me. So yeah, I think, that's basically, you can see along that 15-minute, even that 15-minute thing, we've been, creating this channel. So the integrity of, this thing is, I mean, this just looks like the path of least resistance. And, then you'll have a sell-off here, and that kind of thing. So, yeah, those are my trades. Pound yen, Australian US. Let's just have one more look at the pound New Zealand, see if it's Humpty Dumpty is kind of putting itself back together again. It's slowly creeping off the lows here. So who knows? By the end of the day, if it's in the middle of the bar, nothing really will have changed. It just, the market shakes the leaves. The market tries to, get out the weekend. So to my mind, I'm looking at this as, the governing pattern until proved otherwise. Now, I mean, yes, you see this double top and, prices can start going that way. So you kind of got this V bottom going on here. So let's kind of, again, that's why I wait to the close. The close is so important. 15 minutes ago when we were talking, this was trading at 195. If this ends up trading at, 195.75 by the end of the day, nothing really would have happened other than, it just sucks to watch it. All right, guys, have a great weekend.